looking forward to our discussion today. This is Angela Lambert speaking, and I will give us a quick overview of today's agenda before I pass it over to my colleague Jacob to get us started on our discussion. So we're discussing some of TBR's views on AI hype and how that relates to the current performance of the server market, looking at kind of the major server OEMs and how we think that's going to ultimately impact performance through the end of this year and looking into 2024. So what we'll start with is a review of the aggregate market performance over the last of quarters. Then we will go ahead and take a look at some of the vendor AI strategies and go-to-market strategies that are going to impact kind of how server OEMs are approaching potentially taking advantage of the hype in the market today around AI and Gen AI. Then we'll wrap up by talking about some of our market growth expectations and what we expect to see. So again, my name is Angela Lambert. Jacob and myself cover IT infrastructure here at TBR. That includes the server and storage markets, as well as different topical themes that intersect with those markets, including things like edge computing, quantum computing, certainly AI as it pertains to the vendors in this space. So from here, I'm going to pass it over to you, Jacob, to get us started.
Thanks for teeing me off, Angela. So yeah, before we talk about the effects of AI on the server market, we kind of need to start with a discussion on the context leading up to the server market's current state. So TBR tracks the top 8 server OEMs by revenue through our IT infrastructure benchmark. And here we have a look back over the past 14 quarters to the beginning of 2022 on the performance of the server market. So prior to and during the start of the pandemic, vendors on average were reporting declines in their x86 server revenue. And so as you can see, things started to change in 2021, where the widespread establishment of the hybrid work operating model, as well as the need to add infrastructure to support new applications, was increasing and leading to incremental revenue gains. So this was also happening in tandem with companies ordering ahead of schedule to secure server supplies due to the supply constraints and logistics challenges during that period. And this acceleration in demand, alongside the inability of vendors to keep up with this demand, led to growth in their backlogs through the first half of 2022, as indicated with the on the graph. And then and this led to a period where backlogs were quite large, more than pre-pandemic levels. And as supply chain conditions improved due to lagging effects of strategic actions taken from both OEMs and component suppliers, vendors were able to essentially turn this backlog into revenue, which led to strong growth in the back half of 2022. As we reached the end of 2022, we saw companies shift their behavior with an increased concern for the potential of a recession, and they held off placing large orders and implemented increased approval processes, which ultimately slowed down sales cycles and led to worse revenue performances. And with the slowing orders and backlogs kind of returning back to normal in 2023, we've seen some early declines, pretty significant ones in 1Q23 and 2Q23, as revenue fell by 6% and 18% respectively. And looking forward, we believe that 3Q23 is not likely to look much better in light of the soft demand, but also because 3Q22 was one of the best performing revenue quarters since 1Q19. So it's just going to be a tough compare. And with that context, the other major development at the end of 2022 was the launch of ChatGPT, which really catalyzed the frenzy of activity around generative AI. And that brings us back to the question of this webinar, which is, will Gen AI drive a rebound in the server market?
Exactly. So I think that's really great context. And from here, we can look at what have vendors been doing so far in relation to putting out offerings for customers, and then kind of talk about how we think, looking at this graph here, where we see the last couple of quarters have been fairly challenging for the market overall, particularly 2Q, with probably about 18% overall revenue decline year to year. Looking across the benchmark vendors, how should we think about that going forward? What's realistic in terms of what could happen here? So let's kind of jump ahead in terms of AI strategy. So we'll start out with kind of overarching, what are we seeing from most vendors, and then on the following slide, we'll talk about some specific call-outs of kind of individual vendor strategy where we're seeing some somewhat different market approaches. But I think first and foremost, the first step on everyone's to-do list was generate some market activity, announcements, go-to-market partnerships, and formalize offerings with NVIDIA. So we certainly see that as kind of the first, foremost, most important piece to the OEM's AI strategies. I think that's kind of obvious and logical in terms of NVIDIA having being the main semiconductor to prioritize here, not only given that their GPUs are very popular, but also just maybe more so than that, having a very strong advantage in terms of their CUDA toolkit, which is going to enable developers to program AI and deep learning algorithms. That's really going to be, I think, probably the long-term benefit for NVIDIA, and probably even as AMD or other competitors or even hyperscalers start making some of their own chips for servers. I think really having the first mover advantage in terms of the developer community is going to be a huge advantage here. So we've seen a lot of activity in terms of rolling out AI server designs that are validated by NVIDIA specifically, or have some kind of component related to NVIDIA's developer toolkit or NVIDIA services. The kind of catch-22 here, of course, is that backlogs from NVIDIA and TSMC are slowing adoption overall, and that's a little bit of a challenge, and we'll talk further about how that's created kind of a new set of pipeline and backlogs being reported in the industry, but also perhaps creating opportunity for other partnerships to take root down the line to help satisfy demand from customers who want to get started sooner than later. At this time, I think the biggest question that server vendors are going to have to answer, given that much of the market is very focused on NVIDIA platforms and NVIDIA technology, is where do we fit in terms of adding our stamp of differentiation and adding our value to the customer, and what can we do to make this an easier Gen AI or AI adoption path for our customers, and where can we help them in that journey? So I think that's what we'll look at a little bit in our next slide in terms of the vendor approaches. So I'm going to turn it back to you, Jacob, to cover some of the individual server vendors.
Yeah, absolutely. So talking about some specific server vendors and what their focuses are in their AI go-to-market strategies so far. Starting with Dell, they're really focused on delivering AI-focused professional services, lending their expertise to help architect AI solutions and facilitate the deployment and operations of enterprise AI for their customers. Um, they recently introduced Project Helix in partnership with NVIDIA, which is a strategic partnership to combine Dell hardware with NVIDIA GPUs and software to help create full stack AI solutions with a focus on on-premise deployments. And we expect Dell to continue to leverage this partnership to embed itself in AI, as well as other software partnerships, and really focus on that services piece to kind of bring value to the customer. Moving on to HPE, their AI server strategy primarily revolves around delivering solutions through its flagship HPE GreenLake platform. Most recently, they introduced the HPE GreenLake for large language models, which is a cloud service that provisions AI-optimized HPC resources that are designed for single workload utilization, which positions itself from the public cloud resources that share infrastructure and run multiple workloads, which limit performance. So from a technology standpoint, HPE's AI server strategy really starts with its leadership in HPC infrastructure, with its acquisition of Cray in 2019, and then also HPE's AI software portfolio, which it's curated over the past several years through a series of acquisitions of companies to build capabilities along the entire AI stack, from data management to model training and replication to inference. IBM is a bit of a different one from these server vendors. They've definitely chosen to position themselves more on the software side as opposed to the hardware side. With the announcement of the Watson X platform earlier this year, which enables customers to build, train, and operate AI models. And then on top of that platform, they've also introduced some AI applications powered by pre-trained foundational models under the Watson X brand. And such as Watson X Assistant, Code Assistant, Orchestrate Orders, which are just part of the first wave of AI offerings from them. And then on the hardware side, which is less of a focus, IBM's kind of has a niche in with its mainframes, and last year in 2022 when they launched the Z16, one of the main announcements of that new generation of mainframes was the fact that their Telum processor, their proprietary Telum processor, has an on-chip AI accelerator integrated into it. And so, but that's primarily designed for financial processing AI use cases and much more niche use cases as opposed to some of the other server vendors. So lastly, Lenovo is taking an ecosystem approach to its AI strategy with its AI Innovators program, which has curated a portfolio of AI ISV partners for mass joint go-to-market motions. The company's brought in 50 plus software partners, created over 165 enterprise AI solutions thus far, which covers a broad set of verticals and use cases in retail, food service, manufacturing, and education, just to name a few. So in this, Lenovo's play is largely around their hardware as well as architecting and deploying AI solutions. That I'll pass it back to you, Angela. Angela?
Sorry about that. I had to come off mute. Okay, so from here we're going to go ahead and talk about some of our projections going forward for the rest of the year and moving into 2024. I'm actually going to jump back to the slide Jacob was speaking to earlier really briefly, just as a quick refresher of where we're at before we kind of move into the going forward, because I think the comparisons are really important. So again, coming up next month when we see a lot of 3Q23 financials released, we're probably looking at the very toughest revenue compare that there possibly could be. The 3Q22 overall for the industry was the best quarter in the previous 3 years. So we are expecting to most likely see a similar quarter to 2Q23, where on average the market's going to probably be in that double-digit decline for the server revenue, given that at the same time last year, at the peak of fulfilling those backlogs as supply constraints kind of eased up, which resulted in just some really strong revenue performances for some vendors. So with that in mind, there will likely be still some challenging compares ahead for 3Q coming up, 4Q as well. Moving into 2024, we think that will, in short, we do think there will be benefit from the AI hype. I don't think if you look at the year-to-year growth we saw in 2022, we're going to get to these same levels, but I think it is going to certainly benefit vendors where we will probably not continue to see any of these drastic double-digit revenue declines. I think maybe we'll get back to more of a relatively flat or slow growth type of area. So let's look at some of the drivers that we can discuss around this. So as far as growth expectation goes, we've got some positive things and potentially negative things as well that will impact the market. So will AI server demand fully offset enterprise office in 2024? Probably not, but I do think we'll see a relatively flat or slowly growing market in 2024. Very unlikely to have those continued double-digit revenue declines. And we've already heard, reports from vendors of order backlogs growing and pipeline growing for AI-specific servers. As we look to decode that as individuals who are making financial projections and modeling for the market, we have to keep some amount of skepticism in mind and remind all of us that AI servers are not brand new. So if a vendor reports, Lenovo, for example, in June reported they hit $2 billion in AI infrastructure revenue. Well, chances are many of those of servers were already in existence, especially Lenovo's been very successful over the last couple of years and in their edge computing strategy. There's a lot of AI-backed use cases there, for example. So not all of that is net new revenue. I think that categorization of some existing revenue in addition to some degree of net new revenue. So those are some of the things we're trying to unpack. Similarly, we saw Dell, for example, hasn't provided an outlook on pipeline, but they're reported that 20% of their server order revenue in the first half of the year most AI servers, and similarly a $2 billion backlog. And given the kind of struggles we've mentioned with NVIDIA, that 39-week lead time for ordering those AI servers with a H100 NVIDIA GPUs in them. With HP as well, 800 million in AI orders in Q1. So a little bit of that is, we need to keep in mind that AI is something that these vendors are already been delivering on for a long time. As Jacob mentioned, for example, HP with their Cray acquisition in 2019. Much of this is probably already existed, so we're looking at what's the net new that will really make a shift in the market. It will not be that full $2 billion per vendor. I think we're going to see the increase. I think some of that would have been already happening without some of the Gen AI hype. The good news, again, as we were just discussing, edge deployments, I think, I think they were kind of a precursor that will have already sparked some of these AI use cases among enterprises, and I think will certainly help to keep the momentum growing there. We've seen a lot of vendors have success with, many AI use cases in edge environments using computer vision solutions, for example, and strong demand for that over the past couple of years. Couple of the challenges that we expect to see, AI is still going to account for a small percentage of the server market. So looking at the benchmarked vendors that we've been discussing today, that makes up on an annual basis probably 6 million to 6.5 million server units. Looking at the ODMs, that doesn't include looking at OEMs does not include server ODMs. If you look at NVIDIA and what they're reporting, so in 2023, their plan was to ship 500,000 H100 GPUs. Multiple of those can be in a single AI server, up to 8 of those. So compared to the 6.5 million servers that these vendors are shipping, take that 500,000 GPUs, granted it's just one type and from one vendor, and spread those out across these vendors, other server ODMs, other use cases in the market. There's a relatively small number compared to what the overall server market is consuming in terms of infrastructure. So it will be tough to make a really dramatic increase in the overall revenue growth of the server market. However, all of these servers with these high-end GPUs in them are going to certainly benefit the overall average revenue per unit, which will definitely help drive revenue growth, even if the unit growth is not as substantial. The overall revenue growth should be better just based on vendors focusing on more high-end server units. So then from the customer perspective, we are actively researching this at TBR with the enterprise customers we speak to, but ultimately buyers will have to make budget trade-offs in terms of what they're investing in and or may be waiting for proven use cases or cloud-based solutions to help them with Gen AI adoption. So we do think that that's going to take more than just the year 2024. We think that's going to be a bit longer term before we see widespread adoption there. So that's going to be another factor to keep in mind in terms of how quickly could the Gen AI hype drive rapid increases in server revenues. So I think that is going to wrap up some of the topics that we wanted to discuss today. However, we already have a handful of questions in the Q&A to kind of keep the discussion going here. in our last few minutes. And if anyone else has questions, please feel free to send those in as we're addressing these. So it looks like Jacob addressed some of these in the chat, but we can also read some of these out so that all of the participants can hear. So first, which vendors are included in the benchmark chart that we were referencing? That is a quick and easy one. So we're looking at the largest server OEMs by revenue in this chart. So that's including Cisco, Dell Technologies, Fujitsu, Hitachi Vantara, HPE, Huawei, IBM, Juniper, Lenovo, NEC, Net. Sorry, a couple of those are storage vendors. And I think NEC was the last one there. So the other thing I would just note here at the bottom of the slide, we did exclude Huawei from this data only to help make the overall view of the market more accurate to what was happening by and large, due to the fact that Huawei's revenue had some very significant swings in some of these quarters related to some geopolitical reasons. So we did exclude that data just to keep it focused on more of the general market dynamics. The next question to cover here, also relating to this chart, is how TBR captures the transition from outright server purchasing to the as-a-service business model in terms of our revenue. So looking at the revenue here, vendors would, there's a lot of, I guess, lack of clarity in terms of how vendors are reporting revenue, and depending on what their as-a-service model entails. Is it truly OpEx? Is it simply a lease? That will probably impact how they report their revenue. TBR looks at the segment revenue, and ultimately we make our own estimates of server revenue based on a number of factors. Most vendors are not specifically reporting industry standard server revenue. We're doing some forensic modeling there. What I will say is, although it's tricky to allocate as a service revenue to these OEMs, looking at the as a service revenue as a percentage of total infrastructure sales, which is something that we do in our modeling and research to help provide us our own context. It is a very small number relative to the overall server market. So that's easily less than 10% of the server sales, but probably more close to say maybe 2% or so would probably be in that as a service model. So that it's not really going to have a huge material impact on the chart you're seeing here. And TBR does have forecast data on as a service sales for these infrastructure vendors as well, which is another research offering we can share. I know we're short on time here, but Jacob, I think maybe the next question would be great for you if you can address this one, which is, what are some of the initial AI use cases we expect to see adopted? I think we have time to maybe touch on that one.
Yeah, absolutely. So to start, as Angela was really saying earlier, AI use cases are already quite widespread, and edge compute has a very clear kind of marriage with AI, and some of the areas we're seeing early on are security and safety, as well as retail and manufacturing. And then specific to generative AI, TBR has done some customer research also, as Angela was saying, through our infrastructure strategy customer study. And what we saw was essentially that customer service was one big area, as that was the most popular answer of customers that were either planning to use or currently using generative AI for this. And it was answered at, I think, 59%. And we've begun to see this on the vendor side as well, addressing this early demand. So recently this week, Lenovo introduced the Care of One platform at Lenovo Tech World, which is an LLM-powered support platform. And we expect other vendors to come out with similar offerings. And then the second big one is software development administrative tasks are also popular, and this is another area that we've already seen some early announcements from on the vendor side, with IBM previewing two solutions in this area with Watson X Code Assistant for Z, to help customers refactor their applications in COBOL or transform their code into Java. And then they had another Watson X Code Assistant offering for Red Hat Ansible Lightspeed to help with IT automation. So those are two of the early areas, but we're going to continue to do more data collection this fall with another customer study. So stay tuned for that.